Good morning, everyone, and welcome to another edition of Moneyline with Nancy, your trusted window into policies, markets, and decisions shaping Nigeria's economic future. I am Nancy Nnaji. Today, I begin with a major turning point for Nigeria's banking sector. The Central Bank of Nigeria has announced the successful completion of its 24-month banking sector recapitalization program, which was announced in March of 2024. But the governor of the Central Bank of Nigeria gave us an indication of the banking sector capitalization in November 2023, with Nigerian banks now raising a remarkable 4.65 trillion naira in fresh capital. This is not just a number, it is a signal. It is a signal of stronger banks, a signal of improved shock absorption. It is also a signal of improved shock absorption, like I said, and a signal that Nigeria's financial system may now be better positioned to withstand both domestic and global economic pressures. According to the Central Bank of Nigeria's Governor, Olayemi Cardoso, this exercise has reinforced the resilience of the financial system and strengthened its capacity to support economic growth. But the critical question still remains, will this stronger capital base translate into real economic impact? Will businesses see more access to credit? Will small and medium enterprises feel the difference that we have bigger banks now? And will this moment mark a true shift from balance sheet strength to real sector growth? I'll be discussing this with financial analyst Abimbola Bajomo in just a moment. Then we'll turn to a structural shift that could quietly revolutionize Nigeria's tax system, e-invoicing. This is not just about digital receipts, it's about building a real-time, data-driven tax ecosystem where transactions are structured, verified, and reported seamlessly into government systems. For businesses, this raises important questions. Are they ready for this level of transparency? What changes operationally, and what does compliance look like in a system where data is king? Joining me also later for that conversation is Bayode Agmi, the founder of Pillar Crafts Accounting and Cloud Solutions. And later in the program, we'll bring you an exclusive excerpt from a fireside chat that I had with the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, at the 2026 Economic Outlook unveiling of the Nigerian Economic Society, sharing global insights at a time when economic direction is more critical than ever. So we'll have a lot to discuss. Let's begin with our first interview right now. Abimbola is joining me right now. Abimbola is joining me from Lagos. Hello, Abimbola. How are you?
Hi, good morning.
Good morning. Let's get started. The last time you were on the program, we talked about the banks navigating the recapitalization process. Now the central bank has told us that the process is completed, 33 banks scaled through. What are your first words?
Well, thank God it was peaceful.
Thank God.
We had one of those.
Exactly.
In 2004,
yes,
when we had Soludo's recapitalization. And the central bank has also assured us that banks that are not part of the 33 operation is going on as usual. And we're not getting any scare. And business is going on as usual. And nobody should be scared about their money, which is a good thing. So first word, thank God. And it's also a big thing because most of the capital were raised locally. And this shows that we now have a lot of strength in the local market. And also getting 24% from investors means that us leaving the grey list has also made it important and good for us to have that confidence from the international market. So I think we're up to a good start.
You know why I was actually laughing when you said thank God? Because I also understood what that thank God means. You know, it was not a rocky process as the 2004-2005 recapitalization. The governor of the Central Bank of Nigeria, Olayemi Cardoso, gave that indication, gave that guidance when he was at the bankers' forum, the meeting, I think the CIBM meeting, I think he was invited in November 2023. just a few months after the election, and he signaled to the banking community that recapitalization is coming, guys, so you better get ready. And in March of 2024, they did announce it. So the CBN has given the banks 2 years to recapitalize. So it's definitely worthy and good to say thank God, you know, because all of us are not in a panicky mode, as it were. All right, as you can see the graphics on the screen right now for you and also for our viewers, 4.65 trillion naira has been raised. What do you say about this? And over 72% of that was raised domestically. In this country that we're saying no money, no money, no money, where did this money come from? Domestic investors, because most of these banks did public offers and all of that and all of that. Where did this money come from, Bimbola?
It shows that daily people, you and I, already, you know, having that knowledge, investment knowledge of how we can, you know, help ourselves as a country. A normal person, me and you, bought 10 unit shares. Another person bought 8 unit shares, and all these things made up of it. It means that there's a level of confidence that Nigerians have in our banking sector and in our financial sector. And that level of confidence is coming from financial education and us now knowing the importance of what this would be to our economy. You know, you are not just spending money, you are investing in the system that can allow you to also earn more. And also, you know, looking at just 24% coming from international. In fact, I was not thinking that we're going to get that kind of thing, but, you know, us leaving the gray list also showed that we have investment capabilities more now. The international community is becoming more, they feel like we're now safer, you know. Nigeria is now a place that is opening up for foreign investment, unlike before. So this level for domestic investment is a very good thing. Daily Nigerians are getting to understand the importance of what the financial sector and the impact of the banking sector is to our economy. We're a financial basic system that, you know, I see a lot of posts on social media. A lot of people are educating others about, you know, investing in banking sectors and how they can also earn returns and how can they can grow as people. So this number is actually very good. It's showing that a lot of financial education is coming into the system, and it's a good sign.
So it signals strong domestic confidence as against limited foreign investors' appetite.
Yes.
Okay.
Yes.
Let's still interrogate that 4.65 trillion naira, and my team should put back that graphics, that card on the screen. The 4.65 trillion naira that has been raised, according to the Central Bank of Nigeria. But how much of this is truly risk-absorbing capital versus balance sheet restructuring, or perhaps what I will call compliance capital?
Yes, so if you look at it, one of the things that that was stated by Cardoso in the press release was we now have a transparent balance sheet. And even before the completion of this particular recapitalization, one of the things that came, especially for the risk part, is that there was a new policy that was released that people with high NPL should not be, they should not do banking lending with them. This just to ensure that we have that low risk compared to what it used to be before, which means that people that have high level of NPL that jump from banks to banks and allow it to be high risk money and all that, you know, they're ensuring that banks are not lending people up and down and we don't start having that level of risk. And, you know, that particular circular means that the CBN, the central bank, is getting ready for what this money is and what it means. The money has been raised, right? And we have been promised of a clear balance sheet. And it means that we are starting on a clean sheet. So if all financial institutions are starting on a clean sheet as we have now, it means that policies that enforce that clean sheet is clean sheet and is not high risk as being released daily now. And one of it is the one that was released that I mentioned just now about people that have high NPL. Other things are being released on cybersecurity, fraud, just to ensure that all this money is not becoming very high risk and it's actually a clean balance sheet.
Bimbo, historically, we've seen that recapitalization does not always translate to lending growth. At least the recapitalization that many Nigerians can relate with is the 2005 recapitalization, where we had 89 banks. They were further consolidated, trimmed to about 25 or 24 banks. Now with this recapitalization, we now have 33 that have met these new capital requirements. Where I'm going to, in essence, is that the magnitude of lending growth in the country, our banks have not risen up to that expectation. What structural constraints, be it whether interest rates, whether FX risk, whether a bit of regulatory posture by the Central Bank of Nigeria could limit the transmission to the real economy? We're seeing bigger banks now, 4.6 trillion naira, but if you even dollarize it, perhaps we should even do more, as it were. But the thing right now is, for someone watching, how does this translate to real impact for the economy?
Well, I said it that if anybody comes to promise and says, recapitalization, Nigerians are going to feel it in the next 6 months, it's a lie. And that's because at the level at which it is now, it's not just recapitalization that is going to impact or help lending. I would say that today, MPC has released, and we've heard that inflation rate has dropped from 34% to, I think, 15% in February. And that is a good thing, but bread is still increasing. Food items are still increasing, even though inflation rate has dropped. And that's because we are still paying for that 2 years inflation rates that happened. So what we are just trying to say is that, at this particular point that we are in, we are not bleeding anymore, but the injury is still there, and we are still trying to cure the injury. That's why the inflation rate is like that. But the possible impact is that it's a whole system that makes this thing work. It's not just one thing. So now we are saying that there's money, we have 4-point-something billion, but normally what's supposed to happen is the SMEs are supposed to get more money. Today we have 17% of SMEs making up of the GDP, but 1% are getting money from the banks. When you look at the bank's percentage of people that they lend money to, is 1%, right? So this also means that for that SME sector, for lending to start going towards that sector, it means that interest rate has to drop. And all these things come from the MPC. If they can address interest rates, it means that there will be cheaper credits for SMEs. Now, for there to be cheaper credits, to reduce that risk, we need security. Because the areas that need these investments include agriculture, includes the normal SMEs, which will actually increase employment rates. It will increase, but the interest rate has to drop. But for that interest rate to drop too, we need to have security. Because after interest rate drops and banks starts lending money, it still becomes high-risk lending because farmers are not even safe on the farm. So at the end of the day, there's a whole system that needs to happen. We need the policies, we need the lending to the interest rate to come down so that banks can lend. We need security, we need infrastructures. Now, it will also help if that particular investment comes to that ecosystem. You find out that we will now have more export and we'll stop relying on imports. So the recapitalization is like the foundation. We are one step in, but a lot still needs to happen. We have 4.65 trillion right now.
Yes.
We have money on the table. What are the policies that CBN now needs to start up? It's not just the CBN,
Bimbo,
the federal government.
Do you think that this recapitalization should be tied to measurable lending targets? For example, I remember in the Central Bank of Godwin Emefiele some years ago, I think that there were some incentives that were given to banks that if you lend so, you can do so. We can do so for you. So do you think that the Central Bank of Nigeria should come up with those measurable lending targets now that recapitalization is done and dusted?
Yes.
And to be able to measure it, yes.
Yes, and to be able to measure it.
Yes.
But to help them to, MPC has to help with the interest rate so that lending can be cheaper for the SME. Because
exactly.
you giving me a loan, is it cheaper for me? Am I able to pay it back?
You're speaking like a banker now. I can imagine if this kind of idea is brought up before Cardoso, and Cardoso tell the bankers committee or tell the banks, I'm sure the bank MDs will tell Cardoso about, interest rates is high now, so you people should do something about it. So,
yes. Because as a common man too, if I'm giving SME loan and I take it, the first question I ask myself is, how much is the interest?
It's interest
that I'm paying back? And it's a lot. So I think that's why I said that it's a system that needs to work together, but there's future for it. And if that lending can happen, especially to the SMEs, the kind of economic growth that we'll experience from exports to even food prices will go down, because agriculture, there'll be a lot of investments in the agricultural sector, and a lot of people, food prices will go down. People will be able to farm, will be able to export some of those produce. We'll have less reliability on imports. There'll be job creation. So it's a good foundation, sincerely.
Yeah, because what I'm really saying in essence is that banks have raised capital, but where exactly will that capital go in the next 12 to 24 months? The Central Bank of Nigeria should be able to monitor that. Is it loans, is it treasury assets, or even balance sheet buffers? Whatever it is, the CBN should be able to monitor that. Now, let's talk about another thing, the stress testing. I don't know if you saw the circular that came in from the central bank, I think last month, precisely about the banks to conduct stress tests. So as they are coming out from recapitalization brouhaha, the CBN is requiring the banks to do stress tests. What specific shocks do you think that the Central Bank of Nigeria is trying to stress test the banks against today?
Well, some other circulars that came out from that stress test, part of it is including how they handle their cybersecurity, how they handle fraud, how they handle consumer management, how they handle their lending. So there's a lot of circulars that came out to that stress testing. And I think some of the major shocks that are coming in place is how will CBN, how will financial institutions, banks, how will they handle the amount of customers, how they handle, that this capitalization, one of the things that was promised is lending, savings, and all those investment things. So some of the stress testing that the banks are being called up to do is to tighten their AML. And that's why we are getting a lot of circulars about anti-money laundering policies. We're getting a lot of circulars about BVN. We're getting a lot of circulars about cybersecurity. There was even a recent cybersecurity policy that was released that everybody should send in their cybersecurity. I think these are part of the shock that they're trying to stress test us, all financial institutions. So a lot of circular, we're still expecting more, because anti-money laundering is not just the start. And that's the other circular that came out from NPL, that's NPL, that we should not do banking with them. It's part of why they're saying that we should also not do some things for BVN, NIN. So there's a lot of policies that are coming, and I think that's what they are making us to stress test against.
Okay.
And just to ensure that we have shots around fraud, cybersecurity issues, and all that. So there's a lot of policies that will still come out that we expect.
Okay, Bimbo, 2 questions, rapid fire, one sentence if you can. Do you expect stronger shareholder activism? Let me put it that way. Do you expect stronger shareholder activism now that banks have raised significant funds? Then the second one is, will recapitalization change how banks approach dividend payouts versus perhaps reinvestment? I hope you understand my questions.
Yes, I understand. The first question, yes, I expect stronger shareholder, because now we have a lot of shareholders that are even locally based. So I expect that strong shareholder. Then the second question is, will it affect how they handle dividend? I expect that with this amount of money, banks will still make high level of profits. But it depends on how they spend their money. And it depends on how. So they have to be very careful on how they spend their money to ensure that they have profit. Because a lot of these shareholders will be expecting high level of dividend compared to before, because they've been able to raise the amount of money that they've raised. But that's my answer for the problem. Yeah.
Finally, Have we built banks that are too big to fail? Or we're going to see a CBN sorry for that disruption. That was due to a technical glitch. All right, just finally, Bimbo is still with me. Bimbo Bajomo, a financial analyst, and we're discussing the recapitalization completion of the banks. All right, Bimbo, I was just asking a final question. Have we now successfully built a not too big to fail system? Of course, we did. We had that years ago, but do we now have not too big to fail? Or no, too big to fail, yes, not too big to fail banks? Or do we have too big to fail banks, but central bank will just maintain his own calm and collected? It will just be calm and collected on his side. You guys do what you want to do. We're on our own. If you like, fail.
I think the banks have been built not too big to fail before now. And the recapitalization just inherited that.
Okay.
But the question is, have we built banks that are too big to be saved when they fail?
Okay.
So can we save them in case they fail?
Exactly.
Because these banks have been built as too big to fail from the beginning.
So can we save them?
Can we save them
if there's an issue?
And yes, and that's where the CBN has to ensure that they are shocked. And, there are policies that help them to save these banks and ensure that when they're about to fail, they are saved.
Okay.
I think that's the answer.
I think, thank you very much, Bimbo. We'll continue to look at this in coming months and see how it pans out. Like I mentioned earlier, we've been here before. 2005 gave us bigger banks. The question now is, will 2026 recapitalization of the banks give us a stronger economy? Trust me. Yes, I'll be asking that as we move along. Thank you very much, Bimbo, for joining us. All right, I've been speaking to Abimbola Bajomo, who is a financial analyst, and we've been looking at the bank's recapitalization now completed. According to the Central Bank of Nigeria, 33 banks met the new capital requirements. Let's take a break, and when we come back, it'll be time for us to delve into another discussion. We'll be looking at invoicing, talking about our tax system, and even for you, a business person watching me right now, all that and more when we return from the break. To stay with us.
Unwrap joy, unleash taste.
Previously on Moneyline with Nancy.
So tell me what your experience have been, at least in the last 5 weeks, because this is week 5 of this war.
Yes, week 5. And another thing what we have seen with food prices is a bit of increases, particularly for food products that are not necessarily their season. I mean, food products that are not recently harvested in the farms. So we have seen a bit of an increase in their prices. But of course, some food items have been relatively stable in prices, largely because of the fact that we still have a bit of supply, with the sellers, and also largely because there are no compelling inputs that are driving their prices. But I reckon that in the coming quarters, it is likely that we see higher food prices for even those items, particularly when you capture the spillover impact of the higher PMS prices. One has to recognize that the impact will not be immediate for some food products. It will, however, be over time as...
This is Moneyline with Nancy, and this is a program that sets your business day for
inflation played a 9-1 on us, and the cost of doing business and the cost of living crisis persists. But we can win. We can win on those two things.
We need to work on our infrastructure, maintain what we have, and add new infrastructure. Isn't it interesting to you that it still costs less to ship something from China to Lagos than from Dakar to Nigeria?
Resilience is not only bouncing back when there is crisis or shocks. Resilience is about the ability to adapt, the ability to innovate, the ability to thrive in a VUCA world. Which is basically a world that we have a lot of vulnerabilities, a world that we have a lot of
uncertainty. Naji, for the best you can be, and put that change that you want. All right, Bayode Agbi joins me right now. He's the founder of Pillarcraft Accounting and Cloud Solutions. He's a fellow of ICON and CITN. And most importantly, he's here on the program for us to take a look at invoicing, like I mentioned earlier on. Welcome to you, and thank you for joining us.
Thank you for having me.
Yes, great to have you here. Let's go straight to the issues. Invoicing, what does that mean first? Let's just start from the basics. E-invoicing, yes. What does it mean?
So
electronic invoicing.
Electronic invoicing. Now, it simply means a commercial invoice that has been validated, assigned an IRN, and digitally signed, and then issued and confirmed by FIRS, or formerly FIRS,
yes,
NRS. Basically, that's basically what it is. A lot of people, because of the word invoice in front of it, people usually confuse it. Now, let me give you an example. Commercial relationship between me and you could actually be translated into me issuing invoice to you, and that invoice is paid. However, that is not a tax invoice. What invoice seeks to do is to ensure that all invoices issued within the economy are all deposited or have a repository with the NRS, and it forms part of the ecosystem of tax in Nigeria. And in the long run, that becomes a very big foundation that we're laying the new tax administration in Nigeria onto, that will effectively help efficiency in terms of tax administration and reduce the cost of compliance even to the SMEs.
Can you just even take us through like how e-invoicing is different from invoice businesses currently issue, like you mentioned?
Yes.
There is that mistake, as it were.
Yes.
So can you just run us through how it's different from the normal invoices that we all know?
Thank you. Now, the normal invoice is a simple invoice. I create an invoice and I send to you. However, for it to be validated as an e-invoice, first, it must be, there are very peculiar fields, because one of the things about e-invoice is the fact that it's machine readable. And therefore, for it to be transmitted, there are things that must be standardized. Now, once it's standardized, you need to validate it. One of the things you need to ascribe to is what we call an IRN. Now, that IRN there are some codes that are brought together to give almost like a receipt number, but this number is specific to your organization based on your TIN number. And that is part of what is now given to it, and then it's digitally signed. So one of the major difference between a commercial invoice and a tax invoice is that there will be a QR code at the bottom of the invoice.
Okay.
That QR code can be scanned, and once you scan it, you can actually confirm that that invoice has been submitted to NRS portal, e-invoicing portal, and therefore it becomes a valid invoice. Now, the implication going forward is that if you are doing business with people and you don't give them a e-validated invoice, their tax input, their VAT input, becomes risky for that you may not be able to get it. Because part of what is going to happen is that your VAT is validated based on the e-invoices that are validated by NRS.
So people listening to you now, businesses, how should they go about this?
Thank you very much. Now, one of the things I know most people look at this as a very complex thing. And the approach NRS has taken to follow this, I think, is a wonderful approach, which is also, you need to also note that e-invoice is a global phenomenon. It's not just Nigeria. A lot of African countries also have also adopted it. Now, the first thing NRS has done is that they phased the implementation. Let's go from the big organization, which should ordinarily have systems already, come to the medium organizations, which may have system, and then let's go to the SMEs that may be
they don't get.
But secondly, what they also did is to get people like our firm, licensed as system integrators. Now, our role is, one, to educate, two, to also build systems that helps businesses to seamlessly connect to NRS platform. So you don't need to have the technical know-how, you don't need to build new systems. And part of what we are mandated to do is also build what we call middleware. And that's also what we have done in Pillarcraft. We have invested money into building Usawa Connect, which should help businesses easily connect whatever legacy system they're using to the e-invoicing platforms. So in the long run, that will help businesses comply, should I use the word, easily, and without having additional burden into them.
Is there a period when the implementation begins?
Yes, I mean, we started since last year, and now the people that are doing turnover above 5 billion should have implemented. They've come into the enforcement stage.
That will not be small business.
Yes, you're not a small business. So by now you should have implemented. If you are not, you have come to the enforcement stage. The next level is the businesses between 1 billion and 5 billion. They were supposed to start implementation from April up to the end of the year. By January, they will have come to enforcement stage, meaning that you must have. And by 2027 January, we'll have done all the small businesses. So I think that stratified ways that NRS have strategically placed implementation is also helping in terms of learning, in terms of, getting it down, because we are starting from the organized system onto the almost informal sector.
Do you think that Nigerian businesses are ready for this transition? At least because you are a systems integrator. So tell me, truthfully speaking.
Sadly, a lot of people are not ready. One is that a lot of businesses, when they hear the word invoice, they don't really see what is it about. And unfortunately also, a lot of even finance professionals are not well educated on what this implies or the impact of it when it comes to their advisory to businesses. And that is one of the major issues we're having, because most times the finance professionals are the ones that will educate the businesses on the implication of this, what they need to do, how they need to go about it. And that has affected a lot of businesses, both small, medium-scale businesses, in their readiness check. But over the months, I think the awareness is gradually being created. A lot of system integrators have started to build their solutions. A lot of education has started to come forth, and that is also now preparing businesses for it. And so I'm very optimistic, because to me, e-invoice is beyond just invoicing. It's also going to give us the kind of data the government needs to understand performance of economy and take decisions. Because to me, tax administration is beyond collecting money. NRS should be a database of performance of businesses. Because Because they collect a lot of data related to turnover, changes, and part of what has been inserted to the invoice is things like HS code. That HS code allows NRS to actually know what is happening per sector, per industry. Because now turnover and invoicing is being done based on those sectors. Do you understand? There's a data collected on that. Now, but please also note that that is basically, we're talking of just invoicing, because, there are businesses, a lot of businesses are still very informal. In fact, it will surprise you to know that even some of the businesses that are doing 5 billion and above, some don't even have any form of organized structure in terms of accounting system, unfortunately. So part of the advantage is...
I'm not surprised with what you're saying.
Part of the advantage this is going to cause is formalizing business, especially for SMEs. Because now, SMEs will be forced to kind of systemize in a way. And it's going to be driven almost like the way POS, the cashless policy drove people to adopt POS. Because now, you go to the fruit seller, because he knows that you may likely not have cash, he has a POS. Now, going forward, it's going to get to the point that people will demand that you have an e-invoice, and because of that, if you don't have it, I will not do business with you. And that will force the system. That organization, in long run, will help SMEs. That transaction they have is in cash. God for it. But the only record is now going to be corroborated by the invoice that we are issued. Means that even if it reduces your issues when it comes to tax administration with NRS, because one of the things you need to start proving to them is the amount of turnover that you have made. So they already have the record of it, because by you issuing invoice, it's already validated by it. So, and it's also going to reduce the cost of tax administration, I believe.
Okay.
Because of exemption. Now, it means that tax administrators will go after the people that are not compliant more than the people that are compliant, because it will now be easier to identify based on what is on ground and in their system.
What should business do to prepare? What should business owners do to prepare?
So the first thing
like hearing, what should we do?
The first thing is to get educated about it.
Which they are doing right now with this show.
With this show they are doing. And a lot of system integrators and are also doing a lot of webinars. We are also doing constant webinars. We're doing a lot of boot camps for businesses to learn what is even e-invoice and how it affects their businesses.
What has been the feedback? Have you been getting a lot of people coming?
Yes, we've been getting a lot of people coming.
Because anything concerning business, finance, if it's not entertainment or it's something, people are not so interested, except if it hits their money.
Yes, I mean...
So the kind of feedback have you been getting, like your webinars and co?
a lot of good feedback. Yes, there's that normal, shall I say, lack of trust in the system. So one of the major feedback you get is people don't want their system to be transparent to government. That's a major
understandably so.
Yes. So because they don't trust the intention of the government.
Yes.
But when you remove that, the other thing is they don't even understand what it, like I said, the confusion is that it's an invoice. I'm already issuing invoice. I'm sending invoice to my clients using email. I'm already doing electronic invoicing. So why is this one different?
Yes.
So, and that's one of the reasons why we educate, to explain to them what the differences are, and then also give them a bit of checklist to understand what they need to do. Part of this is doing the gap analysis of their business, to adopting solutions that will help them easily comply. And that's one of the things that we are doing by building Usawa Connect. Usawa Connect allows businesses easily, without going to build a new solutions, to use our platform to integrate with NRS and issue valid invoices.
So business owners now watching, I know I asked you that question. Let me ask it again. For emphasis, what should they now do to prepare?
So they need to integrate. They need to look at their system, make sure that they have a system that can issue invoices rather than using the manual system.
Okay, so they should integrate to systems like yours?
Yes.
Okay, because I need us to be clear about that, because we're now in a new tax era.
Yes.
That has just come up, so a lot of knowledge still out there that we really need to talk about. What's the cost of compliance? Because if we're talking comply, there should be a cost attached to it.
Yeah, but it is not. Let's look at the benefit for it rather than the costs. I think once we start looking at it from the point of cost, we miss the entire thing. At the moment, for businesses that are doing 5 billion and above, there's also the cost of reputation. Because if you are issuing invoices and people don't agree that that invoice is valid, and I can now claim my VAT inputs when it comes to those invoices, is a big cost to me. So I think the major thing, and then like the long-term effects of this e-invoice to the economy is such that it's going to drive meaningful development from what I'm seeing. Because one of the things that's going to happen is that a lot of leakages when it comes to VAT collection will be blocked. It becomes easier to even comply, so to say, when it comes to VAT. And it's going to open up a new ecosystem, because that's also what this policy has done. It has actually opened a new ecosystem for we that are into advisory, people that are into system integration. In fact, I made an argument with somebody 2 days ago to say that at the end of the day, local technologies we developed basically because of this compliance, just like what we have done. It's going to be difficult for somebody developing in US, in UK, to compete with people like us. Because we have, one, the local understanding of what should be.
There's that native knowledge.
There's that native knowledge. So building that into solutions becomes easier. And that's, in fact, most of what we are doing in terms of solutions right now, we're actually building to connect to those old legacy systems. If I use that word, systems that people are already used to. But over the time, like we are also invested into it, is that you start seeing businesses building solutions that have native e-invoicing capacity within it. And that will be something that will be homegrown and going to help the entire nation.
Is there a risk to non-compliance?
Definitely. There's risk. I mean, let's first leave the risk from the point of view of tax administration. Let's look at business relationship risk. Now, look at it from this point that my VAT output is your VAT input. Meaning that if I give you an invoice that you cannot claim the VAT input on, there's a challenge in our relationship, right? And that alone will be an issue when it comes to the risk of not complying. And I mean, like we've seen the way even VAT registration was, is likely going to be a case of where businesses will force other businesses to comply for them to do business with them, saying that if you cannot issue an invoice that is e-invoice, and we already started saying, in fact, there's a lot of SMEs, because a lot of SMEs are actually vendors to the large companies, right? The people that have done the 5 billion and above, right? And most of them, because the large companies they are dealing with, that they are vendors to, needs to have a validated invoice to claim the input VAT, are being forced to comply even before the deadline for their compliance. Okay.
Is there any other thing you would like to leave with our viewers as we round up?
To me, e-invoicing is one of those pillars that I think we got right, and we only need to ensure that it's well implemented. It's going to drive the new tax administration in Nigeria. And I think it's best for everybody to get on board as quickly as possible. Don't see it as something that is a burden. See it more as something that will help your business, and then you get the best of it. And if you have any challenge, you can easily reach out to us. And
you know what's coming to my mind, Bayode? Perhaps we'll do this interview again.
Okay.
If we can even have like a fiscal simulation. Of it.
Yes, yeah.
You understand what I mean?
Yeah, we can do that.
Yes,
we can do a full demo of it.
I think so that people will understand. Let's work on that.
All right, no problem.
That should be the next thing we should do. Thank you very much
for coming. Thank you very much for having me.
All right, I've been speaking with Bayode Agbe. He is the founder of Pillarcraft Accounting and Cloud Solutions, a system integrator, like you heard him say. As a business person, begin to, transit to e-invoicing, especially in this new tax era. So thank you very much. much again. Looking forward to the part 2, so that we'll have a simulation.
Definitely.
All right, just before we end the program, I did tell you earlier on that I had an exclusive fireside chat with the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala. She came into Nigeria after a very busy one-week meeting in Yaoundé, Cameroon, where they did the Ministers' Conference, the MC14 of the WTO, and I had that honor of having a chat with her. So after this chat, we'll see again. Tomorrow is what? Good Friday, so happy holiday, everyone. Happy Easter. We'll see you all again on Tuesday, God willing. But just take this interview, be the best you can be the change that you want to see. I am Nancy Naji, and I'll see you all again. Bye for now. Are we seeing a temporary disruption of globalization or a permanent reset of the global trading order?
Well, thank you, Nancy, and good afternoon, everybody. It's nice to be here. I'm on leave today. I thought I was coming here on my way from Cameroon, where we spent 1 week with the whole 166 trade ministers of the world trying to negotiate deals, and we ran out of time. So I haven't slept more than 2 hours for a night for the past week, and then Chuk and Nancy and everybody blackmailed me into coming here on my leave day. So I'm not, you know, if I'm a bit subdued, you know why, but I'll do my best. I also came in, you know, for my father. You know, one of the things that I grew up hearing about when I was growing up was the Nigerian Economics Society, and my father was a member, and he loved the society so much. So for him, I said, I'll not sleep. I'll come and join you on my leave day. So you asked the question about the global economic order and whether we're in a rupture, we're in a transition, and so on. It is true that international trade is experiencing the worst disruptions it has ever done in 80 years. Since the founding of the GATT, the General Agreement on Trade, Tariffs and Trade, which later morphed into the WTO 30 years ago. This is the worst disturbance and disruption it has faced. And the global world order is also facing some of the worst disruptions, and multilateralism is in question. If you listen to what Prime Minister Makani said in Davos, and I was sitting under his nose when he was giving that speech, there are those who believe there is a rupture with the old order. There are those like Christine Lagarde who might say we're in transition to a new order. But whatever you believe, whether there is a rupture or a transition, I think three things are true. The first is that the old world order is irrevocably changed. The second is we're not going to get it back. And the third is we must look to the future. And when we look to that future, I think there are 2 or 3 things. I just said the same at the WTO meeting where we had 2,000 delegates from all over the world. I said this. First, we need to look at what worked in the old order, because something worked, at least on the trade side. You know, trade lifted the global trading order that was created after the Second World War, made both rich and poorer countries better off. It lifted more than 1 billion people out of poverty. Not all countries gained. It was uneven. There were poor people and poor areas of rich countries that didn't gain, and there were poor countries that didn't gain. And Africa didn't gain as much as it should have. But there's no doubt that it did make a difference. So what was it about that we need to keep on the trade side? And what are the things that didn't work that we need to either put aside or improve? But what are the gaps for the future? And it's very exciting for me that for the global trading system, we're so focused on the old order, but we have new areas of trade that are really doing well. Services is growing at about 4.8% this year. It grew 5.3% last year, where goods trade grew about, I think it was 4.6%. So services trade is growing faster than goods trade. So take this year, we're forecasting 1.9% for global goods trade growth, okay? And we're forecasting 5.3% for services trade. So this is an area of trade that is quite exciting. Within it, digitally delivered services trade, all the trade that is done through internet networks, is growing at 6%. So do we have the rules for this? Have we set the system? So I'm just giving that as one example. Green trade is another, which is worth almost $2 trillion in a $30 trillion global trading economy. Have we set the rules? So 3 things. Let's keep what works. Let's repair what doesn't or put it aside. And let's look at the gaps. We have AI, we have digital. Do we have the global rules, trade rules for those? So that's what I would irrevocably, what I would say, that we shouldn't spend too much time lamenting the what is gone, but we should be trying to move on to see how we can create a future order that will be more beneficial to us, especially in Africa, lest we lose the opportunity.
What initiatives is the WTO currently driving? I know there is the WADE fund, there's the WIEDE, and let me, that's Women Exporters in the Digital Economy, that's what it means, WIDE, yes, WIDE, yes, a fund that was launched. So I would like you to speak on that, how far we've gone, and perhaps if there are other WTO frameworks that Nigeria and other African countries can be leveraging more actively now.
Well, thank you, Nancy. Yeah, there are a few initiatives that we're trying to do to address some of the emerging areas. Well, first, the WTO does a lot of capacity building. It's not a financial organization, so we are not the World Bank. I always tease the World Bank president that he has the money and I have the rules. So we have to work together. But that being said, we have some funds. We've been steadily building the capacity of African countries to help them implement the AFCFTA. Because AFCFTA, the African Continental Free Trade Area, that I really believe in, and the bank has shown that if we implement it, the continent could get over $400 billion richer if we could just trade better, even with each other. And so we've been helping countries building their capacity, and we're willing to do that. We have resources to do that. But going forward, we really believe the digital economy is here. It's exciting. It's here to stay. AI is here. We better start, trying to get our minds about what are the benefits and what are the drawbacks. So one, we can see how we have rules and governance that can manage it, but at the same time, not constrain our ability to make it work for us. So digital trade is very important, and what we are doing is we have a digital, we have a project with the World Bank, or a collaboration to bridge the digital divide in Africa. It's a pilot thing with 16 countries that we've started to look at what are the gaps in infrastructure, because the digital divide is quite deep. You can't benefit if you don't even have the basic infrastructure to do it. We don't have electricity. With internet connections, how do we do that? So that's one project we can benefit from. I think another one is the WIDE fund that we spoke about. Just a year, 2 years ago, we launched the women. We noticed that a lot of women are trading digital entrepreneurs on the internet, and they're doing very well at it. But they need support. They need training. They need capacity building. building. We launched this fund, this modest $50 million, to try and help them and raise the money in the Gulf. They were very supportive. So what we've done is we've launched a global competition, and 4 countries won. Their business associations, here it's NEPC, to try and work with us on trying to help women benefit from this. It's Nigeria, Mongolia, Jordan, and Dominican Republic. Then we further, with these organizations, launched an open competition for all women. And 69,000 applied from these 4 countries, out of which about 300 and something have been selected. They get outright grants. Small grants if you're just starting out, 5,000 or so. Bigger grants if you're already established as a business and you want to scale, 30,000 to help. And it's been widely popular and successful. And if this initial phase works well, then we'll garner more money, more resources. We'll do more rounds and more women. We need to scale up to thousands of women. We're just starting.